Yeah, that will make it the easiest. Give us a thumbs up in the chat. Or if we could do a live stream, just because you're talking about 20% across the board for some of our favorite ideas, and I had my kind of thumbnails read the last few episodes. I think kind of in consequence of seeing some of the change of characters here. So this is the S&P 500 chart that I'm going to start on. Look at Bitcoin at 6666. Did you see that was almost all sixes for a second? But I think the real driver of what's going to be downside for probably, let's say, minimum 30 days. I would say we're got like maybe 30 days of downside. So that's going to have bounces up. I think we're going to have a big sharp bounce up here. We'll take a look at Avalanche, Fetch, Ethereum, Bitcoin, where I think Bitcoin is aiming towards, what that might mean for the other assets in its wake as well. But more importantly, again, it was the kind of S&P 500 that really sent the shivers down the spine, I think, this morning. If you go to my Twitter, there's a few pieces I pointed out. One of the kind of jokes I made in the private group is Van Eck calling the majority of the ETF holders retail investors, effectively, which I thought was interesting and rather poignant. It had something to do also with what I thought was general around the Bitcoin ETF fervor to begin with. Although also it's like adding a new market maker to the ecosystem. So it just means deeper pockets for liquidity on either side of the trade when it comes to the potential volatility and the up or downside adjustments in the market. Now, I'd also said this a few times that every time you see market prices, here, this is the tweet this morning. And as you can see here, we were barely, we just crossed over and we're closing below the creek. So right here, I wanted to point it out. What we've got, these colored bands are called exponential moving averages, and the two below are slow moving averages. And they do a nice picture for kind of painting the creek. Now, the top of the creek is actually the top of all of the wicks, basically. So you can imagine it almost similar to a Bollinger Band. So here, once we started to close down, and you saw this real tight ship between what would be the creek and the current exponential moving averages here, this is the moment that I was thinking we were either going to get a jump and a retest back up, or we were going to fail. So this morning when we woke up and it was all wicks on the top of the exponential moving average here, which we can see, this was the likelihood that we're going to come down to the downside. So I think we're going to get a bounce here. I think we're going to do the same thing though. I think we're going to test the creek at the top here, even though it could be a little bit higher than the EMA for its wicks and stuff like this. And I think we're going to come down lower. We've just had 6 months of basically straight up market cycle movement, and to think for any reason that Bitcoin has escaped this, I think would be rather silly. So it's best to just include it, because what it ends up being most likely is an opportunity, because I think that the end result is going to be the same. It ends up being more money printing in the future, just more $1 trillion stimulus bills. Oh, we got to print even more capital, yay. So this is very likely. We were looking for an LPS from this market cycle movement up to begin with for the S&P 500, who had already gone through a reaccumulation after decline. Now, I think one of the dangerous things here too is to assume that this is going to be a reaccumulation and go up. There is a reason to believe we could go straight down here. But if we look at the macro story for the S&P 500, just kind of a quick preface before we look at Bitcoin, what I want you to imagine here is not the growth of a marketplace, although the United States market has been dominant and brought so many new industries to life over the last 20 years. It's not to say it's not valuable. It's clearly valuable. I love all this cool stuff, this microphone, these cameras. This stuff is fucking cool. And a lot of innovation came from the United States over the last 30 to 50 years, probably even longer technically. But nonetheless, what this means is I don't think we're just witnessing the growth of an industry, but I think we're witnessing the destruction of a dollar, which makes asset prices appear to go up and up and up and up. So although I think we're about to have some downside, at least a few red candles, here basically no red candles on the daily for 6 months. I think we're going to get a few red candles on the daily. We needed an LPS phase after this big breakout anyways. Now, is that the end of the bull market cycle? No. And why is it not the end of the bull market? Because by all means, you should be catastrophically afraid of being in the crash, but it's the crash of the dollars around the world. It's not the crash of the valuable property. So if you're going to own nothing and be happy, one of the easiest ways for them to do that is to buy it out right from underneath you. All asset prices appearing to go up, and probably for a long time. So any of this red today just represents an opportunity to trade more cash for dollars in the future. So hopefully you have some dollars on the sideline for this next little bout of playing, because we're going to come down. We're probably going to come down for, I don't know. We're gonna have to wait and see. But it could be upwards of 30 to 40 days of kind of down and sideways movement. So with S&P 500, it could look something like this, where you chop down and then you see a big reaccumulation pattern in the LPS before going higher, and maybe a complete collapse of currencies around the world over the next 5 to 10 years. So again, that would mean all asset prices across the board, if they're productive, are going to go up and away for basically ever, because what is paper dollars worth? We don't know. Maybe nothing, right? And that's a highly likely probability. So in the face of all of this new technology and everything as well, better to own assets than currency at any given point. So all of this, again, just to say that basically any red or downside we're about to see, maybe about 30 days of down and sideways, maybe 40 to 60, including what would be a reaccumulation trend. And then I'm assuming more upside, because we've come to the conclusion that because we have to assume our governments are generally criminal, the best thing to do is to assume that that's what they're going to do. And that's made this a lot easier for me to feel comfortable with, okay, what are the prices going to do next? And what are they going to do in the long term? They're going to go down. You're going to see some type of reaccumulation, and then they're going to go up again dramatically, because they're going to try to buy everything so that you own nothing and you're left holding paper currency. So again, any paper currency you generally have should, from here on outwards, be invested into some asset or another, because sitting in cash right now over the next 10 years is just going to be only loss. So unless you need to use that cash, in which case then operating capital for your businesses, don't be an idiot, like still need to operate in the US dollar for now. But this is going to be what appears to be inflation of all asset prices. Now, someone made a tweet the other day I thought was interesting, and I wrote a remark on it, and I wanted to kind of meditate on the thought pattern for a second, which was, people asked what would happen if Bitcoin was effectively how could you usurp Bitcoin? I'll ask his question. He says, IQ test, realistically, what could kill Bitcoin? I want to hear what you think. Now there's a few good thoughts here, like the true identity of the founders and the top wallet holders, especially if they started to sell. That could destroy some things. My guess actually was infinite energy. And I kind of talked about this before, but the point of this being, we are about to enter a future, I think, that is very difficult to comprehend, not just because we're going to see an exponential growth in the price curve of things because currency is worthless. We're going to be seeing such a sharp exponential curve in technology like AI that it is massively deflationary for the potential production costs of many things. So I don't know what that means. I don't think any economist knows exactly what that means. And if they claim to, they're just lying. I think for now, though, the next 10 years will be a massive increase in the asset prices. You might be able to inflate a currency even further than we thought before, like true hyperinflation took place. So this might be slower because you're fighting a lot of very powerful deflationary forces at the same time. It's not just about the creation of the money supply, but it's about the deflationary forces within that economy that are changing the ebb and flow of production of whatever it is that you would like to have for the thing that you want to trade it for. Money, currency, whatever it might be, assets. Okay, so I go through all this to say what we want to do is go back, look at Bitcoin. I think this is going to come lower. Yeah. on the daily here for Bitcoin, probably around $59,000 to $52,000 on a wick for a trading range here. And I think it's going to do it in through and the halving, basically. I think the price will be kind of lowest into the halving, just to scare people, confuse everyone. I saw so many memes and tweets about, you're not bullish enough, here's where we are at this part, and here's how far we go. After reading this kind of Van Eck article, most of the inflows are from retail. It said the initial success of ETFs, which have suddenly seen billions of dollars inflows since their loss, surpassed expectations. The inflows are not from significant investment firms, or TradFi players. I'm surprised, but I don't think it's traditional investors yet. 90% of our flows are from retail. So retail has moved this ship quite a bit. We know that Bitcoin has largely been moved by retail, but retail buying Bitcoin on ETFs just sounds kind of silly. Not like, at least from a fundamental standpoint, because most retail people could, if they want, just buy Bitcoin and hold it in a regular wallet if that's what was easiest. Or they can just, what's most likely is because they're just adding it to their own kind of privately managed firm. It's not some bigger fund. It's just someone like, hey, great, I would like to add this to my 401k or something like this, instead of following it directly. So, again, this profit taking to build this kind of nice trading range, I think that we're going to get here for Bitcoin, is just more opportunity. But I think Bitcoin's going to come lower. I think for the next 60 days here, let's measure out where that would put us to. Yeah, like middle of May, something like this, we could be going into Bitcoin at 52, as low as 52,000, but probably not. Yeah, a big trading range. And then for some reason, if it doesn't do that, it could go way lower. Well, again, we don't know. We're in just such difficult times to try to predict the future exactly, but we can at least go kind of one step at a time. And right now, what we're seeing is likelihood of going further down. And this is, I think, also exemplified by the rest of the other assets. Ethereum already returned to the bottom of its trading range. So again, starting to look like reaccumulation after decline. And then do we get a breakdown? Because if we can't start to get back above the point of control here, we could come even lower down for Ethereum, for top of the retest of the box as a backup phase. And that's not out of the normal. So although I'm not going to say that's going to happen yet, I still suspect that this is going to be a reaccumulation after decline because of the hundreds of days into the bull market. Oh no. That it's very likely that this kind of horizontal accumulation range that we're seeing now with Ethereum is going to continue upwards, but if it doesn't, we could see breakdown further. So Fetch was a noticeable big down today. Once we couldn't, and again, I want to kind of highlight, notice how the creek or the EMA bands and what would be effectively just connecting all the tops of the price points. Once we couldn't get back above the bands here, it was time for downside, big time. And we saw this across the board. That's what happened with Solana. Couldn't get back above the bands here on the 6 hour. Couldn't get basically back above the creek and then down hard. So kind of ultimately what we didn't want to happen, but that did happen, was we went over this with Avalanche the other day too. Sorry, there weren't a few more written updates, but we couldn't return back to the top of the trading range here. And notice how right at this intersection we hit the 314 day and the 200 day simple moving averages on the 1 hour. Couldn't break back above, and then broke below, and then broke below hard once we couldn't get back above the creek again. And this was a really hard creek too, because you have all this upside here to a dramatic downside drop here. So all of this was big warning sign, I guess, but this was the final warning sign. So hopefully that all made sense for those of you who've been kind of watching and studying along with this. Rumble has no audio. Thanks for letting me know. I appreciate that. My bad. No sound. Oh no. Okay, sorry. Thanks for letting me know, guys. I kind of definitely messed that one up. They have got different chat windows, and I only want to use 2 monitors too, so it's hard to see all the screens. Thanks for letting me know, though. I appreciate that. Rumble has been no sound for 14 minutes. I apologize, Rumble. I would like to, if you stuck around to listen to me not talk, I wish Rumble had a way to edit videos so I could just delete all that going forward, because I apologize. That's a big waste of time. No audio, but you can hear me now. Okay, great. Back to the live stream here. Yeah, so I think all of this is predictable. I didn't think we were going to get this big of a drop on Avalanche. That's almost a 30% drop we had on Avalanche in a single move to the downside after the check of the trading range there. That actually has put us all the way back into the middle of the trading range. We're basically back all the way to early January prices. January, February. Wow, look at that. So here's why this second portion, because we went into this SOS phase, but we failed on the backup. I think we're going to get one more test of this here, and this could be downside for, I mean, we could go real low. I would be cautious here if we don't make it back above the creek on this next move up. Yeah, because that went lower than I imagined. That took us almost all the way to the bottom of the previous trading range. So, and that's a big dramatic shift in character since the last video. Again, I figured we would go lower, but for Avalanche to come all the way back down in a single swing to effectively January's trading range bottom, I think that's a big change of character. So, yeah. It would be very weary. And I think that this also goes again to this idea of the next 50 to 60 hits. It's going to be volatile for everything. So something like this, I think we get one more bounce up. I think the S&P 500 is really going to show us that, because the S&P 500 is what led it today. And then once we can't close back above the creek, oh no, it keeps switching back to the face. Okay, so my bad. I got to get a better way at monitoring the screen here so that I can see what's actually going out. That's my bad. Okay, so there we go. Now we can see the S&P 500. So I just have to man tube. Okay, so now we're showing the screen. The S&P 500 here on, well, I think upwards of the 2 hours where we were watching. It was the 2 hour I was looking at and posted about this morning, where we just could not get above the band, and you could see very clearly the trend close in what's effectively orange here. So I think we're going to get a bounce of the S&P 500. I think all the assets in the market are going to bounce. We're going to get a bounce up here. We're going to get one last opportunity to close back above this creek. If we do not close above this creek, we're coming down lower for the S&P 500 and probably in subsequent all other assets, and it could be significant. Yeah, think about that. It could be significant. You could see, if Avalanche has already returned to the bottom of its trading range, you could easily assume that the same thing is going to happen to some degree for Solana at around anywhere between 90 and 80 to $110, just to return to the bottom of the trading range if we can't get back above in this trading range here. And so just keep that in mind, one step at a time, because we went lower than I thought we were going to on that wick. So I thought we were going to go low. We went even lower. So it's always good. But not to be dramatic, I think for Bitcoin, again, that's around 52,000. I think there's this large chunk of supply here that needs to be, I don't know, some people say mitigated. There's just a lot of people effectively. There's like CompMan has a lot of thought process right around here. This area. This is just the primary area. The secondary chunk is right around here. All the way back down to 52 grand. This red line, because it comes up and touches the bottoms and some of the tops of the previous trading range. This would be like a portion of the creek, especially because this is such a huge time frame. So The likelihood of returning to $52,000 Bitcoin here over the next month or two is very high, staying close to the bottom of that trading range, maybe even dipping down and below the EMA band. It's just looking more and more probable here, I suspect, because the S&P 500 is just so big. Well, I mean, don't try to fight the trend. So this is going to create more buying opportunities, but right now the signal is we're basically wait and don't buy now because it's going to jump up. Well, it depends. Short-term traders would probably trade this because you're going to get a really nice bounce. In fact, there's already been significant bounces. Like if you look really closely on the 15-minute, or on the 5-minute for Solana, you have these big bounces that the day traders, intraday traders like to play. You get a lot of volatility, so you get massive up and down swings in the very short time frame, but it's quite frustrating. I would much rather focus on the large trend that's taking place right now and the large trend that might be shifting, which is that we've been in bull market territory for 6 months with basically little to no downside, no true distribution. We've seen multiple reaccumulations, 1, it's like 3 or 4 of them clean, depending on the scale of time frame you look at for the total trading range. I think this is going to be distribution. I don't think it's going to be forever distribution, but it could be bigger than we expect. So it could be big downside, especially, again, the fact that we came all the way back down to $38 for a second for Avalanche there. That's kind of shocking to me. That means just from the previous downside drop, that's 35% downside, and that was supply increasing. So not a great look. Same with Fetch. Fetch is actually quite strong, but if you look at it from a more of a trading range angle, this is pretty much done. I think we maybe this is pretty much done. We're going to get a bounce. We're going to test the top of the creek up here, probably around $2.60, $2.35, $2.60 for Fetch, and then we could come much lower, come all the way back down to $1.10. I think we could see 70 to 80, up to 70 to 80%. So how much have we retraced so far? 30. Let's go another 30, 60, 80. I think you could come all the way down as low as 80 cents for Fetch. Yep. Avalanche could come even lower. Avalanche could come. Oh, well, it's hard to say. Again, all of this just means there's an awesome opportunity to catch the next part of the bull market. But for now, I wouldn't try to catch this falling knife necessarily, because you're going to have a bunch of bounces and peaks throughout the marketplace. So it's really easy to get kind of messed with emotionally. Once the trading range shows itself and it gives us a better idea of where it wants to settle, it's much easier to take a position. For now, just wait and watch. Or if you feel like you're an intraday trader, then to trade all the volatility, because it's probably awesome for you. Yes, awesome. So I'm just going to make sure everything is still working. It appears to be. Okay, sound should be on now. Okay, awesome. Functioning perfectly. Awesome. Thank you all for letting me know. Okay. What else did that... Oh, you know what we didn't do yet? Look at the dollar. Oh, yeah, the S&P 500 is still pushing lower. We're going to come lower by maybe a bunch. It could fall straight. Don't mean to get anyone worked up, but... it could come quite low. Let's take a look around the map here. Let's go look at the DXY. Dollar, strong, up at $1.06 too. Okay, so there we go. That was two noticeable things. A, the trend shift. The trend shift from, because at first I thought this was going to be distribution. I really did. It looked like up thrust after distribution. And I thought this was the last kind of like head and shoulders movement, but the fact that we've gone to the upside now for the dollar, I think we probably get some consolidation. But if we rip for another upswing of the dollar as the S&P 500 comes down, it would look almost picture perfect, wouldn't it? For the strength of the dollar. which would, yeah, that would be good for other countries. Like in Costa Rica, the dollar would go further, I guess, right? So there's that. And that could be a big chunk. You could be talking, I mean, in currency, versus currency, like if you ignore Bitcoin, in currency versus currency, that could be like a 10 or 20% difference in purchasing power for the US dollar over the Costa Rican currency in the next 3 months, 6 months. Massive whipsaws on import and export. That's what we're going to see over the next few months as well. I think the thesis I've laid out about understanding that this market is made up of criminals, and once you understand that, it's easier to know what it's going to do next. So we're going to go down. Might go down for a little bit longer than anybody would like. Could be pretty low on some of them. So let's see where some other things are at just for fun. What else is going to give us some good data? The VIX today. Okay, this will be fun. Wow, yeah, the VIX today. Almost back to some of its top highs. We could get into new areas of fear again. We could, although I don't think it's going to happen today, we could be headed towards there. But again, all those just represent buying opportunities. Every time the VIX is super high, that's the other thing to remember, is like people are quite scared, more than they should be usually. They could be way more scared. Don't worry. Like you can scare them into buying only toilet paper all the time, but so they could be more scared. That's what this big peak way back here looks like. This is people buying toilet paper all the time on March 16th. That's the peak of fear, and here's fear settling down basically. But here's fear increasing. I don't think it's going to be super long-lived, 30 to 60 days, and then we start going bullish again, and they start printing more money. Actually, well, yeah, who knows? We're gonna have to keep a close eye on it because we really don't know. It's just, I think one step at a time is the best way to go. This could whipsaw back and forth and wash out so many things. Like we don't know when you get into the unknowns of where we're at in 2024. This is like, these are up there. Trust me. There's a lot of black swan potentials, not to totally wreck Bitcoin, but to do weird things in the market. That's for sure. Yeah, so we're going to see a nice bounce probably. We're going to see further downside for Bitcoin, which is going to look dramatic. Maybe not super dramatic in Ethereum. It's hard to say. We could just get a nice trading range for Ethereum built out here too. But definitely with Solana, Fetch, and Avalanche, there's a possibility to reduce or find even better positioning. So we're going to have to see. We also haven't really closed a trend trade too deeply yet. So again, this isn't for sure yet. We'll just have to wait for the next movement. The next movement is going to be pretty pivotal. It's going to tell us, because again, let's use Solana as an example. If Solana comes back into the box and closes, Avalanche could still do something crazy here where it just bounces back up and above, because we're in a bull market still, and does something like this, and we end basically the bull market of this one. But it doesn't feel like that. It feels like we're going to get maybe 30 to 60 days, because if the S&P 500 is rolling over, it's going to roll over for a little bit. It's not slow. That's my guess. Okay. Can you look at Solana? IRSLS. Yeah. So again, Solana's trading range leading up to this moment, the moment that gave us the bullish incentive to the upside here, and the trend change over to the downside here is very similar. Again, you can notice how we couldn't break above the back of the creek here. We got sent down into a spring. But note how our previous shakeout was already equivalent to the spring. Whereas here, our shakeout volume and our deeper than price signature spring volume is down massively. So there's much stronger selling, or I guess there's much more supply than there is demand. Would be the white coffee-ian way to say it. There's more supply than there is demand by a significant amount. So if we can't get back above the creek here and make this a spring in any way, shape, or form for Solana, and same, Avalanche is a little bit more abstract. I think, yeah, because we had all of our spot position open for that one still. So Not sure. If we can't get back above in the box here, damn, you could see as low as $20 for Avalanche again before you saw a reaccumulation like this, and then another move to the $70, $80 range. So still, I think we'll get to $80, but we might see this really weird backfill for $20 before going higher. So just be very, very, very defensive of downside if you need to be for these ones, or otherwise just wait out your spot position until the end of the market cycle, basically. Boom, boom. Yeah, hopefully that's always helpful. Your voice is so thank you. Yeah, this is normal. Totally agree. Yeah. Vibra Finance says, keep crushing, bro. You're a legend. You're one of the real ones out here. Thank you. I'm glad you're enjoying the content. I'm just learning as well. Yeah, I expected it would break down this week, but I thought it would go further, I guess. Just kind of, I guess, sorry, I didn't think it would go this far. I thought it would break down this week, but I didn't think it would go this deep. So yeah, those are some pretty big, deep downside pressures, and like across the board too. Bitcoin is holding up the best. But I think that what we need to do is look at the market as one whole thing. Bitcoin doesn't stand alone by itself in the universe. There's consciousness exists without Bitcoin. I mean, that's clear. So with that in mind, the reason why I'm assuming or looking closer to that $52,000 downside now is just because of some of the way the other positions have panned out. It just seems more likely, especially Avalanche is just one of the clear ones then. It was one of the market leaders. It did a 4 or 5x higher than Bitcoin here. So now that it's dropped, what is that again from top of the bottom here or to where we are right now from previous? That's 30%. That's deep. That means to return that same price, we got to go up 60%. That's for all, just so you know that too. If because this is always counterintuitive, it's hard to explain, but I'll tell you just so you know. Notice how when we measure to the downside, watch this. This is quite fun. When you measure to the downside, you're like, oh, I only lost 40%. Now look how much it takes to get back to the top. 68%. You think to yourself, well, I only lost 40%. Why do I have to go back up 68%? Right? That's what you'd think. Most people don't think, oh, we only got to go back up 40% if it's down 40%. I know this is confusing, but that's market love for you. So we are actually 60% to return to the previous wick high of Avalanche. And that's the same thing with Bitcoin that gets kind of confusing. We've only dropped a few percent, but to get to the wick high, we got to go 10%. And not so bad for Bitcoin. So Bitcoin's dropped 10%. Avalanche dropped 60. Yeah, that's a big difference. So clearly Bitcoin is a better stable reserve of saving, like a savings mechanism. But I watch here too, Bitcoin will drop. The USDT is not the best version either. So I guess overall taking profits into Bitcoin is proving to be pretty good standard. What was the drop on Solana here? And let's go to return to high. So 40%. So if you had taken all your profits from Solana and Avalanche and put them into Bitcoin at high for high, you end up saving, at least for the moment, 40 to 50% of your profit loss. So taking profits into Bitcoin pretty consistently is a great strategy. Even though, and again, note that if you were just to be in Bitcoin from bottom to top, for Solana, that's a 20x. For Bitcoin, that's only a 3x. So taking the 20x profits into Bitcoin is a much better way to preserve your wealth than USDT. I think that will become the trend over the next year or two. I think more and more people will recognize that. Even though the dollar is going to gain value here, as we were just looking at the DXY, it's only like 10%. That's not huge. It's probably only 10% to the upside, and that's based off like the Japanese yen getting all fucked up and crazy and raising interest rates. So the race to the bottom for the currencies themselves, with probably only 10% to the upside here in this current momentum swing, because it could go this high. Jesus. Yeah, it'll be really interesting to see if Bitcoin only comes down to 52,000. Well, the dollar is going up in this next cycle swing for the 30 to 60 days before. I think it would probably peak out. I think it would drop pretty dramatically too. I think it would do something like this, and then get closer, and then maybe fail totally. But that's a different story. That's closer to 2030. It's way too far to pontificate 2030. Could be flying in spaceships by 2030 for all the fuck I know. Okay, but yeah, so all that means is that was deeper than we thought, faster than, at the same time frame, but definitely deeper than we thought. So it could be a trend shift in general. Could be for the next 30 to 60 days. I'm just gonna leave it at that. The upside is more than the downside, because they're just gonna keep printing currency in the long term, and they're gonna hyperinflate currency in the long term by printing more of it. Even though it's a very deflationary world we live in, it's still going to be noticeable in assets, because assets will be one of the only ways to maintain the thing that it is that you want in a world that we're moving into very quickly. Although I think we're in for some pretty fun surprises along the way, so keep that in mind. Anyways, sorry I didn't make a few more updates there for the private bear group and the written stuff. I'll start doing that more. I think thesis writing is going to become my more of a bread and butter focus for me. It's probably just better for my mind not to spend too much time on the screen or making videos either. So I'll start doing more written content for all the private bear members going through the email. And I think I get a clearer picture of what it is I'm trying to say when I actually write it down. So look at this, 20% drops across the board on the left-hand side. Actually, let's go to CoinGecko too for fun. You know, everyone always likes to go to CoinGecko. Let's go to CoinGecko and take a look at the chain link down, $14 chain link. Yeah, there it is. Yeah, across the board. Even back at our little world here. Stretch it out. Yeah, 20% negatives across the board pretty much. Link down 20%, Fetch 15, Avalanche 16, Sway 18. And that's what profit taking looks like, ladies and gentlemen. Thank you all for joining us. We'll see you in the next one.